What's in a name? That's a very famous quote from William Shakespeare's Romeo and Juliet. We think it applies to the question that investors should be asking today. Welcome back to Dollars and Cents. My name is Joel Garris. I'm a certified financial planner and certified financial fiduciary with Nelson Financial Planning, where our team of certified financial fiduciaries stands ready this coming week to help you change your life with a successful plan that provides you with peace of mind for the future. There's so many terms out there in the industry, and the industry's done a great job at creating a lot of confusion with the various terms that they have out there. So you can go visit somebody that might be called a financial planner, a financial advisor, an investment advisor, a stockbroker. I mean, the list goes on and on. There's no shortage of names that are floating around out there in the financial industry. And then on the flip side, there's also now a lot of labels in terms of how the compensation is paid to that particular person, whether is it fee only, is it fee based, is it commission, is it a blend, is it an hourly fee? I mean, there's so many different options out there. And somewhere along the line, the notion of one over the other, fee over commission, or fee hourly over fee over, at the end of the day, a cost is still a cost. The question is not what's in a name, it's what's really happening underneath the hood. It doesn't matter whether someone is calling themselves a financial planner or a fiduciary or whatever they are calling themselves. And by the way, they should certainly at a minimum have those types of credentials, whether they be certified financial planner or certified financial fiduciary, whatever the case may be. I mean, as a baseline, if you're dealing with anybody in this industry, you would want them to at least have those types of credentials. But there's more to the story. There's more to what investors really need to know and what particularly they should be asking today. The most popular question I'm getting right now is, who's going to win the election? Or what's going to happen if person A wins the election? What's going to happen if Trump wins the election? What's going to happen if Biden wins the election? And those are certainly important questions, and believe me, we'll certainly have some shows on those in the future, particularly as we get closer to the election. But we think that there is another question that strips away all of these labels and all of these terms and all of these titles and boils it down to one simple question. Whether you're a fiduciary or not, whether you're doing things in the best interest or not, the bottom line question is, how much is this costing me? If I tell you something is low fat but it causes cancer, you're probably not going to want to participate. Here's the dirty little secret that the financial services industry knows all too well. And you really need to listen to this part, because the industry knows very well that the vast majority of the investing public has no idea what's on their statements. No idea at all the information that's on their statements. Nobody reads it, nobody understands it. The statement is 15 pages long, 25 pages long. Shoot, we've seen some statements that folks have brought into us that have been 30 pages long, okay? How are you ever going to figure out what is exactly going on? So our point is, don't get too hung up on the label or what somebody is or isn't doing or how they're describing themselves or any of those kinds of factors. The bottom line that every investor should know is, how much is it costing me? Because let's face it, during tough times like this, the bottom line is, if you keep your expenses down, if you keep your costs down, well, then you keep more of the return. That's always kind of how it works. But particularly during tough economic times, those are the times when you really want to be particularly concerned now more than ever as to what the bottom line is. So let's just put some numbers on this for just a second, okay? Because the cost typically for investors is buried in page 18 of the 20-page statement. And as we said, the industry sort of knows nobody ever looks at this stuff, so we bury it. We slice and dice, we put different words out there, we put different terms out there, and at the end of the day, it just creates confusion, and investors miss what ultimately is their bottom line cost. So let's say you've got $500,000. You have a $500,000 account, you want to use an advisor. Certainly a lot of folks running around out there running ads that say they won't talk to you unless you have $500,000. That's a different topic for a different show. Candidly, I think the notion of discriminating against somebody because they don't have $500,000 says a lot about the kind of operation that is being run. Folks with less than $500,000 probably need more assistance and guidance than those that have more than $500,000. But we don't want to deal with the people that may actually need some guidance, that may actually need some real help. We just want to deal with the people that are easier to deal with. That's the message when you hear that. And we philosophically disagree with it. That's why our firm has never had a minimum, nor will we ever have a minimum for you to come in and visit with us. I digress. Let's put some numbers on it. So I've got a $500,000 account. Let's say you're being charged 1.5%. You say, oh my goodness, Joel, that sounds like a lot. Is anybody actually being charged that? And the answer is, yeah, a lot of people are getting charged that kind of a fee on an annual basis. 1.5% of $500,000 is $7,500. 1% of $500,000 is $5,000. That's $2,500 difference that goes in your pocket rather than the financial services company's pocket of which you are dealing with. That's about $200 a month. That is significant. Even going from 1.25 down to 1%, that's a $1,250 savings on a $500,000 account. That is big. Now, take a minute and imagine even bigger numbers. What if you had a $2 million account? Maybe you weren't having to pay 1.5%, but maybe on those you were paying 1.25%, or maybe even 1% on that. What if you could have that portfolio only be costing you 0.25% and still be able to have some active management and be able to speak to a financial person on in person or on a phone or on a Zoom call or whatever the case may be in today's world? Well, that's a huge difference. Now you go from paying $20,000 a year, and believe me, there are many people out there who do that and don't know it, down to potentially $5,000. Run the numbers. Folks, that's the question to really ask. It's not what's your title, what's your credentials. That's kind of a baseline question, frankly. It's not how are you paid. It's not how you do business. It's not where you're located. It's not any of those things. If you really want to get down to the brass tacks of it, to the bottom line, it doesn't matter whether someone calls themselves a planner, an advisor, or a lemon wedge. It's how they ultimately move that cost over to you. Fee only, fee based, wampum based, it doesn't matter. It's all nonsense. The bottom line question is, if you really want to know whether someone has your best interests at heart, ask them the number. Ask them how much. How much does that translate in terms of dollar numbers? And frankly, if you hear a number greater than 1%, you probably want to look elsewhere because there's better options than that. I'm sure that segment disturbed the industry, a lot of folks in the industry a lot. Doesn't matter. What I've just said is 100% accurate. So check it out. That's the question that investors need to be asking. What am I paying on my account?